I've been a big bull, as you know, been probably the bull on the street for the last couple of years. I turned right at the bottom in October 2022. Actually, was bullish before that, but said I think we hit a bottom that day, and it reversed and never looked back. Um, and I've remained with targets that are way above anybody else on the street for a long time. As you say, coming out of October 22, I was at 6,000. I raised my target to 7,000 on the S&P back in January of this year, and raised my target on the NASDAQ from 20,000 to 23,000. I have since raised my NASDAQ target to 24,000.
Wow.
So, pretty steep run from here, in my opinion. I have 55,000.
Good day, investors. Today, we dive deep into some significant and bold predictions that could impact your portfolio strategies. Our featured expert, David Hunter, a well-known macroeconomist with decades of experience, has shared some compelling insights on what he calls the melt-up phase of the market, where explosive gains are ahead. Asterisk, but a major downturn may follow star. Let's break down the highlights and what this could mean for you. Hunter has been an outspoken bull for the past couple of years, and his bold market forecasts have set him apart from many on Wall Street. He accurately predicted the market bottom in October 2022, and now he's setting eye-popping targets. 7,000 for the S&P 500, 24,000 for the NASDAQ, and a stunning $75 for silver. Hunter believes that we're in the final stages of a 42-year secular bull market, and the best part of the rally is yet to come. He's confident in his predictions, especially for the Russell 2000, which he forecasts to hit 300, a significant catch-up move after lagging behind other indices. According to Hunter, we could see a 50% gain from where we are now, with the potential for a broad-based rally across sectors including tech, industrials, home builders, and materials like copper.
Target on the Dow, which is up from 48,000. And my biggest call is I have a target of 3,300 on the Russell 2000. So that one people have a hard time with because the Russell's been the laggard. But I think you're going to see a big catch-up rally there. And basically from here, it's 50%. So, and I do believe these numbers, I always tell people I'm not tied to the end of the year. I don't give year-end targets. They're really cycle targets. It's the top of what I think is a 42-year secular bull market that started back in August of 1982. So whether it happens, in November, December, January, I don't really care. It's, I'm not going to worry about whether I call it quite that precisely, but I do think there's a real possibility it could be this year that we get there. If we don't get to the final top this year, we'll be darn close. A big part of it will be this year. So, that's a big run from here, and I think probably not the Russell, but I think for the S&P, my number is conservative. So I think it could even exceed that. So I haven't raised it yet, but I'm toying with the idea that I may have to raise that one. So I think it's going to be, I think tech has had a big correction after their great run. Semis have had a big correction. I think they're in gear, and you're going to see those groups lead the market up. So they're going to be joined by a lot of other groups. So it's no longer going to be the case that people can say it's a narrowly based rally. It's not good quality. I think you're going to find that it's a very broad rally into the top. So cyclicals will play, value will play. I think semis, the SMH is maybe 240 now. I think that can get to 400. So there's plenty of upside there. The Mag 7, I think, will continue to be leaders. But at the same time, I think you're going to see industrials play. You're going to see home builders play. You're going to see the materials play. The copper looks great.
Yeah.
You're also going to see things like financials play. So the area that I don't like is the energy area, the oil, the XLE. XLE, I think, is going to lag a lot. It could actually go down, but if it doesn't go down, it's going to at least not be performing very well. And I,
What's driving that?
well, as much as I've been the bull on the street for equities, I've been the bear on the street for oil ever since it hit 130. WTI oil here hit 130 during the invasion of Ukraine, and then never looked back, never saw that level again. So around 120, I think I said you could see it back down to 85. And then as it got down under 100, I said you could see it down into the 60s. We got down into the 60s a couple times in the last year, and most recently, maybe in the last month. I think it's going to roll over here and probably go to 60 and maybe through 60. So that's really what's driving it. There's a surplus of oil out there. The world economy is not great. It's chugging along at a very low rate, and in some cases in recession already. And I think next year I'm calling for a global bust. So, the demand for energy is just going to continue to weaken. And meanwhile, the supply is, certainly decent. So I'm a bear on oil for this cycle. I think it's had its run. And I'm a huge bull on oil post bust, in the 26 to 30 period, 2026 to 30. I have oil going as high as $500.
What?
So
Semiconductor stocks could be poised for a sharp upward move as well, with semiconductor index, SMH, projected to hit 400, but not all sectors are expected to shine. Hunter remains bearish on energy, particularly oil. He points to a potential surplus in the global oil market and weakening demand driven by a sluggish world economy. Oil could dip as low as $60 or even lower in the near term. However, he also predicts a major turnaround for oil prices post-2026, with prices possibly soaring to $500 per barrel by 2030, driven by a massive global economic recovery after the bust. Now, investors, this is where things get particularly interesting. Hunter is calling for a global bust after this melt-up phase, and he's not talking about a mild recession. He's predicting a crash in financial systems that could rival or exceed the 2008 financial crisis. He believes that central banks around the world, including the U.S. Federal Reserve, will be slow to react, exacerbating the downturn. Once they do respond, Hunter anticipates a staggering $20 trillion in quantitative easing, QE, dwarfing the $5 trillion injected during the COVID-19 pandemic. He emphasizes that this global bust will hit other regions harder than the U.S., with European and Asian banks at greater risk of failure due to their higher leverage. The result? An 80% decline in U.S. equities from peak to trough.
Yeah, I think oil can get down to 30 in the bust. And then, once you're going to have a huge response to a global bust. I'm jumping ahead of myself, but you're going to see a huge response from all the central banks around the world, because global bust means big financial crisis, maybe worse than 2008-9 for many countries. For our banks here, I don't think it'll be as bad as 2008-9 because they got hit so hard then and they've cleaned up their act. They have much less leverage. But for Europe, for your banks, for Canada, for Asia, I think there's plenty of room there for the banks to fail. So you're going to have banks failing across the globe, and the central banks are going to have no answer for that other than money. You will see, I've said this for a while, I think you will see, we saw $5 trillion in QE out of the Fed in response to the pandemic back in 2020.
Yep.
I think you'll see 20 trillion this time. That's just the Fed. So, and proportionally, every central bank, your bank doesn't know it yet. They're fighting it right now, but they're going to be forced to do the same thing.
David, there was a lot to unpack there. And one of the things that you said was global bust 26 to 30, that some countries are already in recession. So for me, my brain is just trying to take this all in and going, on the left hand, I'm saying the party's still going. And on the right hand, I'm saying, be careful, it's all going to go to custard. And
yeah, let me go ahead.
Yeah, unpack that a little bit for us, because my brain's now confused.
As I said, I jumped ahead a lot. So just to slow down a little bit on the time, I think I'm calling this a melt up. This final stage of this 42-year secular bull market will probably be over, if not this year, and I think it could be this year, sometime in the first quarter of next year. And I really, people will get upset with me because they tell me I keep pushing my timeline. I'm not pushing it. I'm just being realistic that to say that the market can go up 30 to 50% from here, I have to allow for the fact that it's not going to happen in 3 or 4 months. I think it could because it's going to be a parabolic run, but I have to allow for the fact that it might push to 4 or 5 months. So it'll either be in the fourth quarter or the first quarter. Following that will be this global bust, and it's a global bust refers to the economy and the financial system. But it'll be accompanied by a bear market that I think in the U.S. will be something on the order of 80% peak to trough. 80%.
That's
so just using my targets right now, if the S&P tops out at 7,000, I'm saying it could get down to 1,400.
what?
I mean,
So that's like the Great Depression back in the day. So
that's 29 in 1929 we had a 90% peak to trough drop.
correct.
This won't be probably quite that big, but it could be 70 or 80%. And why? Because when I say global bust, I'm using a term to differentiate from anything we've had in the post-World War II era. Even 2008-9 was not a bust. It came close, but a global bust is really the system is breaking apart. It's in free fall. We almost got there in October of 2008, but we pulled them back from the cliff. When the commercial paper market froze up, GE was rumored to be going under. We had all the banks pretty much down at zero. The Fed acted, and the Fed and the government acted pretty quickly from that point and prevented us from going over that cliff into a bust.
Yeah. I'm
saying this time they won't act fast enough, partly because of 2008 and everything that's happened since then. I'm focused on the Fed, but I think all the central banks are of a similar mind, and that is we don't want to do QE to infinity anymore. We're done with that. We learned our lesson. We're not going to do that anymore. It's easy to say that until you're faced with a free-falling financial system. So they're going to be slow.
Because you said just before, sorry to interrupt you, you said just before, back during the pandemic, they printed, because QE is printing money, basically.
Right.
And you said that during the pandemic, they printed 5 trillion, but you think that the next time it'll be 20 trillion. So they're going to go completely crazy.
Yeah. So right now, if you ask Jay Powell, he'd say, no way, we're not even going to do $1 trillion. We're never going back there. If you asked every central banker, Lagarde or your central bankers, they'd all say, we're not doing that again. That was a mistake.
Similar to the 1929 crash, bringing the S&P 500 down from 7,000 to around 1,400. In light of this, Hunter stresses the importance of knowing yourself as an investor. While he expects the market to surge in the short term, he warns that many investors, particularly retail and institutional players, may become overly bullish at the top and could be left vulnerable when the bust occurs. He encourages investors to make strategic decisions that align with their risk tolerance and to anticipate when they might need to exit. His message is clear. This melt-up could deliver tremendous gains, but be prepared for what follows. Investors need to remain nimble and avoid getting caught in the euphoria at the top. There's a lot to unpack here, and it's essential to stay informed and connected with expert insights as we navigate these volatile markets. Whether you're bullish, bearish, or somewhere in between, Hunter's predictions are worth considering as you plan your next move.